Hi, I'm Kim Opolinski, a real estate associate with Remax Real Estate. And this is Stephen from YegTube TV.
Hi everybody. We are watching the Facebook live feed tonight, so if you have any questions or comments, just leave them in the Facebook feed and we will respond to them.
I just received this award this week, and I would just like to give a special shout out to my clients from last year. Without your purchases and selling, I would not have been able to get that award. I'd also like to thank my family. I know it's not easy being married or having a mom as a real estate agent, because you don't always get to keep your commitments to your family. And I'd also like to give a shout out to my awesome broker, Carl. So today we have our first guest, Tara Borle from Mortgage Architects. Hi, Tara.
Hi, Kim.
She's here to talk about the pre-approval process and any mortgage questions in general. We did have a lot of questions sent in this week by email, so we'll make sure those get answered for all of you out there. Stephen, can you remind everyone how to get a hold of Tara? So, Tara,
Yes.
let's say I'm a first-time home buyer.
Okay.
I gave you a phone call,
Okay.
booked an appointment. I come into your office. Can you explain what's going to happen now?
Well, Kim, before you would have come into my office, I would have had a conversation with you over the phone and said, okay, whenever you come in to our appointment, I'd like you to bring in some income confirmation, pay stub, letter of employment. And then whenever we sat down, I would go through your mortgage application with you and teach you all about mortgages, how to pay them down faster, and then work on your numbers and get you pre-approved. And that's pretty much it.
Okay. What is the interest rate right now, Tara?
Right now, depending on the bank, if you have 5% down, you're looking about 2.69 to 2.59 to 2.69 for a 5-year fixed rate.
Okay. And what is CMHC?
CMHC is the insurance company many lenders go through so that so if the client doesn't pay their mortgage back,
Sorry.
if the client doesn't repay their mortgage, the bank doesn't take the loss, the insurance company does. You would ask me what CMHC does, but just so you know, Kim, there's 3 different insurance companies: CMHC, Genworth, and Canada Guarantee. Okay. And they all do exactly the same thing. They insure to the bank that you're going to repay your mortgage.
And why do we only basically hear about CMHC?
CMHC is the most talked about. It's been around for the longest, but you're right. Lots of times everyone generalizes and says CMHC, but again, there's 3 companies,
Okay.
And your mortgage might go through any one of those.
And how did things change on March 17th?
On March 17th, the insurance premiums went up. So, for example, prior to March 17th, if you had 5% down, your CMHC premium or insurance premium, see, I did it right there, your insurance premium was 3.6%. After March 17th, your premium, if you have 5% down, is now 4%. It makes a difference of about $50 a month.
Okay, a question just came in actually. Why do CMHC clients get better rates than people who put down 20% or more?
We get asked that question all the time, and it's hard to explain to a client that has more down payment than 20% that they may not be able to get as good of a rate as someone with less than 20% down. And the reason for that is because the bank has, with less than 20% down, the bank has the insurer backing them. So they're able to give discounted rates.
Okay. Stephen, do you have a question from a viewer?
Yeah, we had a couple emailed in. These people want to stay anonymous, I guess because of the personal nature of the questions, but I don't have a credit history. How long will it take for me to establish a credit history, and when can I start shopping for my home?
Just because you don't have a credit history, that's not necessarily a bad thing. It's easy to get credit history established. What I would recommend is you go into your local bank, get a secured credit card. What that would look like is you would put, say, $1,000 down, and you would get a Visa and use the Visa, pay it off. Use the Visa, pay it off. The bank would let you do that because they have that $1,000 as security. Another way you can establish credit is to get an RSP loan. What that would look like is the bank would give you, say, $5,000. You would take that $5,000, put it into your RSP, and the bank would give you a loan to put that $5,000 into your RSP, and you would make monthly payments every month on your loan, and that would report in your credit bureau. It doesn't take long to establish credit, probably 6 months.
Another question that was emailed in was they're wondering if they can get a mortgage on a mobile home.
You can definitely get a mortgage on a mobile home. One of the questions that the lenders would be asking is the age of the mobile home, and something else they would for sure be asking is the mobile home on owned land or leased land?
Okay, Tara,
Kim.
why is it better to use a mortgage broker than a bank?
Well, Kim, I think that's a good question.
I think so too.
A mortgage broker, we can shop your mortgage out to lots of different places. So, for example, let's say we send you out to one lender and the lender is giving us grief about maybe they don't like your letter of employment, or they called your letter of employment and there's some hesitation. We can send you over to another lender and it might be smooth sailing somewhere else. Different banks have different appetites for different situations. So this way you get the best rates because we can go through all of the banks and it's going to be a smoother process.
Okay, how much does it cost to use you?
There's no cost to the consumer to use a mortgage broker. We get paid by whatever bank we go through. So Scotia pays us, TD pays us. There's no cost to the client.
Okay. And so it's sort of a no-brainer for people to use a mortgage broker.
Yeah, I have to agree with you, Kim. Very, very true.
Okay, so when my husband and I bought our house, we were given the option of insurance of choosing disability insurance, so that if one of us got hurt or something, we weren't getting in money, so that they would pay our mortgage while we were disabled. And also, they would pay off our mortgage if one of us died. Are those still both options?
Yeah, good point, Kim. Insurance is really important, especially whenever you're buying a house and you want to make sure your family is protected. There are 3 different insurances that most of the banks will offer. Life insurance, critical illness insurance, that's heart attack, stroke, cancer, and disability insurance. Disability covers you if you get hurt and can't pay your mortgage. You don't have to take all of them. You can take one of them, and
Can you choose more than one though?
Yeah, you definitely can. You might not need all of them. Sometimes people's employment will have a benefit of life insurance or critical illness. So it's definitely something that's important to look into whenever you're purchasing a home.
Okay. So we're going to continue now with questions that have been sent in to us over the week. Stephen, what's the next question?
The question was, how long can an interest rate be held for once I'm pre-approved?
Depending on the lender, you're looking at probably 90 to 120 days.
Okay, now let's say I'm self-employed. I don't claim any income personally. Can I get pre-approved?
Definitely. The banks have in the last few years clamped down on people that are self-employed and not pulling and showing any income on their notice of assessment. However, there are other ways we can get you approved. Mortgage brokers have access to lending institutions that specialize in clients that are self-employed. So definitely you can get pre-approved indefinitely, even if you haven't shown income historically. There's still banks that we can work with to get you pre-approved and into a house.
Okay, do I need a down payment to purchase a property?
Good question. You need to have a down payment, but your down payment can come from a borrowed source. So, for example, you can get a line of credit. If you already have a line of credit, you can use that for the down payment whenever you purchase a home. But just remember, whenever you do move into your new house, you will have a payment on that line of credit and you'll have a payment on the house. So that we just have to make sure that you can afford both of those payments whenever you move into your new house. And not all banks do that program. It's called the Flex Down program, but not all banks participate in that program.
Okay. Now I have had some clients ask me, can I use my credit card, get a cash advance on my credit card?
Yeah, I don't think that would be a great idea. The answer is yes, you could do that. But I don't think that would be a great idea because the interest rate on a credit card is so much. What I would probably recommend is just go set up a line of credit and use the line of credit for the down payment if you don't have the cash saved up.
Okay, sounds good.
I got another question here. Do I need more of a down payment if I'm purchasing a age-restricted condo?
On age restricted, no, you don't need more of a down payment on an age restricted condo. What you might be referring to is CMHC does not finance age restricted condos. CMHC provides housing to all Canadians. Age restricted buildings doesn't fit into CMHC's category because of that. So you don't need more down payment, but CMHC will not be providing the insurance on your purchase.
Okay, because I know last year my sister was thinking of purchasing an age-restricted condo, and her bank told her she needed to have 35% down.
Well, Kim, that's why it's important to use a mortgage broker because we can go through all of the banks. So for stumbling blocks like that, there are some lending institutions that will ask for more down payment because it is age restricted, but using a mortgage broker, we can easily send you to a different bank that doesn't require more down payment because of age restricted building.
Okay. This question was emailed to us from a potential client. He wants to know, if you could buy a house within a corporation, does the corporation need to have established credit history? And if so, how established?
You can buy a house in a corporation. What that would look like is you would have to open up a holding company. The bank would require more down payment. Right now, you're looking at about 35% down, depending on the bank. And it would have to be done in a holding company. As for credit history for the company, no, you wouldn't need credit history for the company because it would be based on your personal credit history because you would be signing a personal guarantee.
Okay.
I got another question that was emailed in. If I was going to buy a rental property, how does that affect the amount of down payment that I'd have to put down?
On all rental properties, you need to have 20% down. Sometimes people will ask how difficult is it to qualify for a rental property, but something you have to keep in mind as well is we can also use the market rent for the property that is being purchased to offset the mortgage payment that will be on that on that rental property. So it's relatively easy most of the time to qualify for a rental property. However, you're right, you do need to have that 20% down.
So what about if you're buying the home for an immediate family to move into?
Immediate family, you only need 5% down. So an example of that would be Kim, if you wanted to buy one of the boys' condo.
I'm not doing that, boys.
They put me up to this. If you wanted to buy one of the boys a condo downtown so that they can go to Grant MacEwan or U of A, you could buy that with 5% down.
Okay. Now, I heard that you need to possibly sign something with your lawyer.
The bank can require you to sign a stat deck that it will be not rented out, and your purpose for purchasing this property is for an immediate family member to live in.
Good to know. What is Mortgage Plus Improvements?
So the program you're referring to is called Purchase Plus Improvements. What that program entails is someone purchases a house, and for example, let's say the house needs a new roof. What we would have the client do is get a quote for the new roof, and we would incorporate that quote into the mortgage. Something that is important to remember with Purchase Plus Improvements is the work has to be done before the money is released. The bank isn't going to give you the money for the improvement and hope you do it.
Okay. And what are the different types of mortgages, and what are the differences?
So you can have a variable mortgage, and that is a mortgage that fluctuates with prime rate. If prime goes up, your rate goes up. If prime stays low, your rate stays low. The opposite to that is a fixed mortgage. What a fixed mortgage is your payment doesn't change for however long your term is, and your interest rate doesn't change for however long your term is.
Okay.
We got one last question here. If you're an immigrant to Canada, is there special mortgage programs for immigrants?
Yeah, definitely there is. There's a great program. It's called New to Canada for clients that have moved here and have not an established credit rating. There are ways that we can help them with 5% down. We would need a work permit and possibly, depending on what if they don't have a Canadian Credit Bureau, what we would probably require is a letter from their landlord just stating they've paid their rent on time. Or if, depending on where they came from, we could possibly pull a credit bureau from the country, if they're from the States, International Credit Bureau. So definitely there's some great programs for clients that are new to Canada.
Okay, so I've written an offer on a house.
Okay.
You, as my mortgage broker, has given me the okay to take off the condition of finance.
Okay.
I go out and buy a brand new car on credit. Is this okay?
No, don't do that, Kim.
No.
So when the bank approves you and tells you you can remove your financing condition, they're telling you that based on the information they have at that time. It is imperative you do not go out and seek new credit. After possession, do what you want. But before you move in the mortgage funds, it's imperative that your situation doesn't change. Don't quit your job and don't get a new car, and everything will go along smoothly.
Okay, awesome. So I'd like to thank Tara for being on our show and for being brave enough to be our first guest.
No more questions?
No. And remember, Tara will be back here on May 3rd when we have all the guests back in one room that are going to be over the next 5 weeks to answer any questions that you may have thought of after the fact. And next week, John Davis from Cabin to Castle Property Inspections will be here to share with you the information, what happens during a property inspection. And make sure you email me any questions that you would like John to answer. And Stephen, can you remind everyone how they can get a hold of me?
I sure can. If you'd like to contact Kim Opolinski, you can always call her, send her a text message, an email, or you can follow her on Facebook.
Kim, before you wrap up, I wanted to say thank you very much for having me as a guest on your show. And thank you very much for trusting me with all of your clients to get their mortgages approved. It means a lot, and I truly, truly appreciate it.
It's my pleasure, and I appreciate you too. You are awesome at your job.
Thank you.
Everybody use Tara.
Everyone use Kim.
Well, that's all for today. So I bid you adieu, and bye till next time.
Bye.
Thanks for watching, and if you haven't already done so, don't forget to like us on Facebook and to subscribe to us on YouTube.